You talked about private equity. A lot of times you think people in big fancy suits, high-rise buildings downtown. This is changed, and it's really opened up to the everyday investor from 25,000 into someone who is a little bit more sophisticated, accredited.
Welcome to The Flow, Real Estate and Money Show, a show focused on helping Canadians understand the different elements of real estate, mortgage, and finance. The goal of our show is to provide Canadians with the tools, information, and knowledge to have more success when it comes to their investing and real estate related decisions going forward. My name is Alex McFadden, and I'm your host. I can't wait to get you into the flow.
Welcome on, Mr. Austin Carroll. Good morning, sir, and nice to see you today.
Yeah, good morning. Nice to see you as well. Thanks for having me on.
Well, for our podcast listeners, they can't see you, but obviously I'm happy to do so. I really appreciate you coming on the podcast here today, my friend, and more excited to talk a little bit about, well, not just equity, but also your journey and you as we talk about where we're going at. But because I've already given people a brief intro into your situation and roughly who you are, I feel like that doesn't really unpack who is Austin. I had an awesome chat last week, and you let me know about a little bit of your past and your history, and I think I'd just like to really dig into that for a second. So just give me a little bit of a once-over, my friend. Give me a once-over as to who you are and the company you work for, and we'll talk a little bit about what we got to share today.
Yeah, well, again, thanks for having me on. And I think, my background started in Calgary, but moved to the States actually at a pretty young age. My background, as I always say, was in hockey. As a Canadian kid, my goal was to always make it and play in the NHL. And I went far with it, ended up playing junior hockey in Victoria, and then was drafted by my hometown team, the Calgary Flames. So, that was an incredible experience. Ended up playing several years in the American Hockey League and finished my career over in Germany, which I actually took all my real estate and exams in a little proctor in a little center where no one speaks any English in Germany. So, it was a really cool experience, learning a lot of things about myself and dedication and work ethic with hockey. And then, evolved now, which we'll probably talk a little bit more about, into the private equity real estate world.
Awesome, brother. That's so cool. Well, that's like the super fast, hyper speed version of it, but always the best stuff is in the details, in my opinion. It's always where the good stuff is. You know what I mean? And I mean, we got to first of all start by saying boo Calgary. So sorry, as a Vancouver Canucks fan for life. I know.
That's okay at this point.
I'm a broad array of listeners in the podcast here from all over Canada that listen to and watch all sorts of different hockey games. Listen, we all can say that we hate the Toronto or dislike the Toronto Maple Leafs equally. So it's okay as long as we're on the same page on that front.
Yeah, I have to. I have a loyalty to Toronto. A good friend of mine plays on the team, grew up in Arizona, which some of you may know, Austin Matthews. So I have to at least give him my little plug and say that wasn't always a Leafs fan, but right now I definitely root for him and the Leafs. So we'll see what they can do.
Well, fair enough. I'm an Austin fan, not a Leafs fan. We'll go with that. I'm okay with that, brother. So, I mean, the reason that we started this conversation actually goes back with original business partner Taylor, who we've had in the podcast in the past. And not just the fact that you guys run a private equities firm, which is going to be a center point of our conversation today, but honestly, just our chats back and forth about your experience and progressiveness. Typically speaking on our show, we talk a lot about real estate, mortgages, what's happening economically speaking. And I know we're going to touch on some of that here today, but one of the things that I note that a lot of people are actually really interested in is how someone makes transitions to certain points and what are the key points across their life that allow them to achieve certain goals. I mean, as an example, you when we first spoke, you had mentioned to me that, when you got into hockey, you got your first contract. Instead of spending all your money on, an Escalade and a Rolly, you invested your money, unlike most of the other guys. So, but I really want to unpack that and say, like, how did that come about and what did you do and why did you do that?
When I first signed with Calgary, which was, back in 2015, like most young individuals and athletes in particular, you think that's the first contract and it's only the beginning. And I even remember saying, money's not made in the first contract. Well, for me, it was the only NHL contract that I signed. And luckily enough, I had a lot of good support people in my life saying, let's be smart with it. Obviously go out, have a nice dinner, enjoy yourself. But, don't be going and buying those luxury fancy things. This is just the beginning of your working career, whether it be hockey or after. So Got involved in a few real estate deals at a very young age, which I think, everyone always says best time to get into real estate is when you're young, or yesterday or today. So had a few successful projects down in the United States with a group called Western Wealth Capital, and got my toes wet while I was playing hockey, which was a great experience because, a lot of these investments that we work on and I got started with are completely passive and hands off. So as much as you want to know information, what you're investing into, updates, you can, but you can also trust the company, invest your money, and focus on being a professional athlete, a doctor, an accountant, a lawyer, mortgage broker, and let these companies that are going and doing and operating really manage those investments. So I think it was one of the biggest decisions of my life was to make that first investment. It was a very successful one. And I think every investor loves that feeling of a good deal and hunts for it after that. So I think that's really what got that spark in me to pursue it after hockey.
Yeah, I mean, so getting your feet wet in that type of in real estate as a whole, or learning how to invest, is obviously key. But one of the things that we've noticed is that, anytime that someone, and we've heard the stories about people who get money or they fall into money, whether it's through hockey or life or whatnot, and the fortunate opportunity to have something like that, there's a lot of people who are preying on that, and there's a lot of mistakes that people can make. And even you don't even have to have a lot of money, but there's tons of people who are preying on folks when it comes to investing into funds and other types of assets or different types of real estate that don't. I guess to start off with, what was it that you think in the first place? Did you look out for something to make sure that you had a good investment opportunity? Did you have people in your life to guide you? And if so, what kind of advice were you given?
Yeah, I think I grew up in a real estate entrepreneurial household. My father was in real estate, and right out of college, he started working for himself, starting businesses. And kind of a backstory: my father, Phil Carroll, and my business partner Taylor, his father, Dave Steele, they started right out of college working and building businesses together. They ended up being in the houseboating business out in the shoe shop, and then evolved into real estate. So I think, as a young kid, we used to go and tour all these different properties, and I didn't understand why. And, my dad was always trying to do napkin math of what makes these deals work. And it's funny enough, Taylor, full circle, Taylor and I are now going and touring these same cities, interior BC, Las Vegas, Phoenix, doing the exact same thing. So that's a kind of a really cool aspect. Not a lot of people can work with someone they've known their whole life and also follow suit from their parents. But when I was making those first decisions, and just as I love helping my clients, it's really knowing, someone like in the private equity world, but then having connections with the companies going and doing it themselves. You can be an expert in one specific thing. And I think that's where the real advantage is working with a group that has 15 to 30 years of experience and has done it 50 times, rather than trying to go and piece it together yourself.
Yeah, no, that's good. So, I mean, first takeaway right off the bat is the one thing, in knowing one thing that you're good at, or working with someone who does one thing really, really well. We talk to clients about that all the time. It's like one of the big things that not to make this about me, but I say to people all the time, I'm like, only focus on investing in what you're good at and what you're interested in. And if you focus on that one thing, you're going to do way better than if you're someone who's trying to spread your money into 50 different things that either you're not interested in, you don't care about, or you don't know about, or you're not working with an expert. I think that's key advice, Austin. Hey, I don't want to skip over this. You mentioned your dad, and you told me the story briefly about how your dad and Taylor's dad built their business. Give us the breakdown, man. That was a cool story. And I want to hear, I think everybody would love to hear and listen to how they made their business coming about, because that can inspire someone today to do it.
Totally. And I love the story. Unfortunately, my father passed when I was a relatively young age, when I was 18 years old. And so I love looking back, talking about him and these stories. But Dave and him, they went to University of Calgary together. And near the end of their university days, they put together a party. And it was a pretty large scale party. They had a few different bands, some different areas for bartending. And it went so well, they said, I think we could really work together. And they were driving out to the shoe shop one day on a ski trip, and they saw a houseboat on the side of the road for rent. And they pulled over and thought, hey, why don't we rent this out for the next summer? It was fully booked for the next 2 summers. So obviously 2 business University of Calgary students said, hey, there's an opportunity. So that day they went and rented a barn, and they started their houseboating company, and started with 1 boat and turned it into several thousand. Kind of their claim to fame had more boats than the U.S. Navy fleet at one point. And so really just took a supply and demand business opportunity and turned it into a very successful venture. And, they kind of slowly evolved houseboating into the real estate game. And from there, they were business partners for my dad and Dave's whole life.
That's so cool, man. I love that. And it just built and built and built from there. And I think that's so key because like there's so many people that look at, someone who might be quote unquote successful financially or successful in business and think, man, how did they even get into this space? How did they get into owning all these apartment buildings and all these different things? And for you, it started with a party and then houseboats and then buying houses and fixing them up. And then it just kind of went further and further from there. Hey?
Yeah.
Was there any thinking about that? I mean, you were pretty young, obviously, when your dad passed, but was there any key information, advice that he gave you about his journey, his experience that you've taken across for your life that would be helpful to someone else that's just getting started?
Yeah. I mean, it's definitely something that he lived by, and it might be, you might hear this phrase a lot, but he always believed in really going big, go big, go home. He always says it takes just as much time and effort to put together a small business plan as it does a big business plan. And so, just extraordinary determination towards a big goal and really just going for it was what he always went for. And he lived his life like that. I try and, follow the footsteps. It's definitely some big shoes to fill, but he was always someone just going all at it. And he brought a lot of energy, and, Dave was his business partner and really best friend, and they worked really well together. So I think just that was one piece of advice, whether or not it was probably the most important one he could have given me, but it's one that stuck with me to this day. It comes to mind right away.
That's so cool, man. I love that. It takes just as much time to put together a small dream as a big dream is kind of the way I perceive that, exactly. Which is so true and so awesome. Austin, let's talk a little bit about your company right now, what you guys focus on, because I think it matters in real estate today. We'll talk about some of the headlines that are happening. I'd love to get your opinions and feedback on them, but you guys run a company called Integrated Equities. You primarily focus on helping people get invested into these large scale projects with small amounts of money. That term private equity scares the crap out of people. People think of oh my gosh, that's like multi-millionaire dollar, but you guys have people who are just average. That's a bad word, but they earn an average income or everyday families that can invest and really learn how to make money with these types of programs. So break it down for me, man. I want to understand what the heck is private equity? What does that even mean to me? What are we talking about here?
Yeah. Yeah. And I think it's a scary term. And to this day, I think there's so many ways to interpret it. But, essentially what we do is we go out there and find different real estate companies, whether it be a company acquiring a multifamily or an apartment building or developing an apartment building. We work in some self-storage, some car wash. So there's a wide range, which I'm happy to dive a little bit further into. But our company goes out and finds these companies. We do our due diligence on both, the company, the management team, the markets, and then we bring forth what we believe in the current environment in the market to be the best opportunities for our clients. You talked about private equity. A lot of times you think, people in big fancy suits, high-rise buildings downtown. Well, this is changed and it's really opened up to the everyday investor. We have people investing from $25,000 into a high-rise development in Vancouver or Toronto to someone who is a little bit more sophisticated, accredited investor who is looking at, $100,000, $500,000 into these projects. And I think, people from first-time investors to seasoned investors see the opportunity to invest alongside some of these large institutional partners. So, it's really exciting to be able to say you're from Vancouver, invest into a project right down the street that you thought, only the big boys call it, could participate. And for your 25, 50,000, you can be a part of it.
So let's talk about that briefly then. What kind of projects are you seeing on a normal basis that people could really, you mentioned obviously everything from car washes to other items over and above that. What are the things that you guys are finding that people are investing to right now, or generally speaking, people are interested in? Where are you guys going these days?
Yeah. So touch on a couple of those. We work on 6 different real estate companies, and those are in real estate REITs, so a portfolio of assets. We work on specific individual deals, and really the asset classes are multifamily predominantly right now. I would say most people in today's environment and that we work with are excited about if a development company can get the numbers correct and across the finish line. developments are really our strong suit right now and what we're focusing on. There's a lot of hurdles right now getting permitting, zoning, financing in place to make these projects work. So when we can work with some of the companies that have those in place, people are really attracted to those. And I'd say the companies we work with right now, and I can use a project that we're working on in North Vancouver, for example, we're bringing on investors about $8 million, but the site's already pre-zoned. Their building permits are being approved and they have financing in place. So a lot of those hurdles you hear about on all the news and everywhere right now, we bring on investors when some of that risk is taken off the table. Obviously, there's always risks involved with investing, but I find right now with the lack of supply, investing into a project where it is going to break ground and some of the variables are taken off the table is really attractive to some of these investors looking at opportunities.
Got it. Okay. Well, let's talk about that right now, because we all know that building and supply is a major issue right now in our country, and it's probably something that comes up with your developers and your builders. So what is the general consensus right now of the firms that you guys are investing into? Are they slowing things down? Are you seeing people nervous or weary about the marketplace? Have the costs changed? Like, what are they dealing with right now? What are the challenges that a lot of these developers are facing?
Yeah, I think all of those are challenges. I think, with costs being a variable over the last several years, construction costs, labor cost, financing has been one where, it's increased so much that, what margins were thin already. And now if interest rates have increased, the penciling out of the deal doesn't really make sense. So it's deterring a lot of developers to say, it's not worth our time and effort to go and build this when there's not a lot of profit at the end of the day. Ways that are good incentives for these groups that we're working with is their, majority of their costs are fixed term and fixed costs. So they're going in there with fixed term on their construction costs, a lot of the property management costs, so they can really understand where the underlying number will lay. They're also going in all these projects that we're working on right now and you'll know more about this, is through the CMHC financing route, which is incentivizing developers to go out there and build these, apartment buildings. And a lot of them have to be qualified through energy efficiency or affordability. So they are incentivizing, to provide affordable housing to the markets.
So, and that's true. There's a lot of people looking to use the CMHC program, although I could tell you that program is a lot of fun. It takes quite a long time and certainly there's a lot of hoops to jump through. So big question really is, with all of what's going on, externally speaking, the new federal budget, the new guidelines, the government's talking big. They're saying, man, we are pushing building. We are pushing supply. We're giving money away. Are your developers feeling that same sense of positivity? Are you noticing that people are all jumping back in the water and developing right now? Or what's the boots on the ground feeling right now with most of these developers that you speak to regularly?
Yeah, the companies that we speak with regularly are very confident in wanting to get into these markets because they do see the underlying supply and demand issue. They're targeting markets with continued growing population. One thing is interest rates have been continuing to rise, but so have rents in most areas. So those have kind of been going against each other. But yeah, there's a sense of optimism of getting these projects into the market. There's a lot of interest from family offices, REITs, large scale REITs out there to purchase these newly constructed, stabilized assets to add to their portfolio. I'd say one thing that, we work with other companies that buy pre-existing apartment buildings, and, they are also just looking at the current economic market and state and saying, as much as the Canadian government would like to deliver these types of homes, it's pretty unrealistic what they are expecting to do. And people are still coming here and they still need places to live. So I think that there is still, you talk to all these companies, there's optimism for sure in their portfolios and in these developments that they're putting across the finish line, but they are a little more picky. Things have slowed down for sure. Maybe someone who is doing X amount of deals per year, they're only doing half of that because they are a little more selective on the areas that they're purchasing and the deal numbers.
Well, I guess the question is, are you finding that the velocity of these projects getting done has increased or decreased? Like, we obviously know, like, according to the Trudeau, basically, he's going to build double the homes in the next, 7 or 8 years right now. Are you getting the sense from the developers out there that they feel like they're getting injected with what they need to do this, or are things kind of status quo and they're still dealing with a lot of the red tape?
Yeah, I think the latter. I think that there are obviously companies that are able to go and bring new product to the markets, but I don't think from what is being incentivized for them is it, a total change in mindset of we're going to go and we're going to develop everything we possibly can. We're going to buy up everything. Rezoning timelines can take longer than the actual construction period, which as investors, that's just eating away at some of your returns near the end. If that construction then project that you're investing into gets extended by a year to get rezoned or re-permitted, that can really hinder your underlying return. Where we focus on, and it's very niche, right now we probably hear from a company a week, a month, looking at us to maybe underwrite or look and raise capital for a deal. And we're very selective because only a few of them really make sense. I'd say right now with the development projects that we're working on here in BC, we like to bring our investors in when they're putting their shovel in the ground. A lot of that red tape, whether it took 2 years or even a year, it's already finished and complete. So what they're focusing and what they're investing in is the actual construction and the actual sale of the building, which again, there's always going to be hurdles to overcome, but it's putting it into a little bit of a de-risk situation when you can come in when they're already developing.
Got it. Okay. So let's talk technical stuff here. Private equity, you mentioned that almost anybody gets in a situation where they are able to, almost anybody who has $25,000 to $50,000 could invest into your company. So what kind of things are you guys looking out for to make sure that it's a potential good investor? So if somebody's listening to this and they're interested, and what kinds of return and timelines are people dealing with?
Yeah, and that's a great question. And I would say that's first and foremost what we do. We sit down with our clients. We want to know what they're looking for. Some people are looking for high growth. Some people want income. We also do look at their overall net assets, their liquidity, and make sure that they are investing a reasonable portion of their assets into this private equity asset class. And the reason we work with a select number of companies is we want to provide a different range of return, timeline, asset class, risk tolerance. So, we have a company that's out of Ontario called New Haven, and they're a mortgage investment corporation. So they're investing into primarily first mortgages today, and they pay an 8% per year distribution. So that'll be for people looking for income, lowering their risk tolerance and having some very consistent monthly distributions. It's for a certain type of investor. On the other end, we offer development projects. Those are going to be a little bit higher risk because you're going and you're creating value, you're building a project, and those timelines will be about a 2 to 3 year investment period. And really, when we look at development projects, we usually won't bring it to our investors unless it has a 20% annual yield on the development. Obviously, those returns are paid once they've built, stabilized, and sold the asset. There's no cash flow in a development. Your $50,000 is going to that portion of the roof that they're building. But with development deals, we're looking at a 20% plus annualized return.
Okay. So there's a huge range in the potential that someone could return based on those projects. So how are they analyzing specifically what types of investments that people should get invested in, and how frequently do these opportunities come up?
Yeah, I think a huge part of that is looking at what they already have. If someone comes to us and, a good chunk of their net worth is in development projects in BC, we would probably look and say, hey, let's diversify into some of our US assets, or we have projects out in Eastern Canada. So we don't want anyone to be over concentrated into a specific company, but also into a specific area or asset class. And when it comes to looking and evaluating these different projects, I think it has to do with their risk tolerance. Are you comfortable with your investment being tied up for 3 years? Do you want liquidity? These investments are looked at as illiquid. So your investment goes in, and until the sale or a certain period of time has elapsed, you can't redeem. So it is important for these people to understand that it's not bought and sold like the stock market. It's essentially in a hard asset, which is the beauty of real estate is over time it has increased in value. So the longer you hold, a lot of time there's more upside.
Okay, that's good to know, and I think good for a lot of people to hear. You can't just break it like a GIC and walk away with your money. You do have to wait the term, like 2 years, 3 years, 4 years. Well, what is a typical turnaround time for most of these different types of projects?
Yeah. So as I mentioned, right now in the purpose-built developments, which are the apartment buildings we're working on in BC, it's about a 2 to 3 year investment period.
Cool.
Right now we're looking at 24 to 30 months is your investment dollars are in, the project is break ground, developed, occupied, and sold, which, they are, one thing we work with is no startups. We work with tested and true companies. They all have to have a track record. So we can go to all of our clients and say, hey, here are what they're forecasting, but take a look at their last 15 projects. Some are going to overachieve, some might be right under where they are looking to achieve. But you can see that these guys aren't just going out there and doing it for their first time. They are, well-established companies.
Okay, well, that's interesting. And I mean, I know you guys are down in the States, you guys are in Canada. Where, like, if you're putting your money somewhere today, are you more likely to put your money into a project in the US or in Canada, and why?
Yeah, and great question. I think one thing that Taylor and myself and our whole team actually at Integrated Equities prides ourselves on is we are investors. Earlier on, I mentioned that I got into investing through some of these companies that we now work for and work with. So, we're investing alongside our investors. So when we go and we look at a project and we say, hey, we're really excited about it, we're investing our capital too, which makes us really excited. And it aligns, bringing our properties or opportunities to our clients in line with our expectations as well. So right now, I would say our main focus is on BC apartment developments. We're from North Vancouver. We actually have a very exciting new opportunity in North Vancouver that we're working on. And, just being in your backyard, being able to drive by the site, talk to people in the community, and just know the area really well is a huge advantage. There was huge growth in the US over the last, 2017 to 2020. And we were doing a lot of stuff down there. Right now with higher interest rates, a lot of these multifamily buildings there is opportunities to buy, but I would say our focus had shifted from the US to really focusing on home ground here.
Cool. That's awesome, man. I think that's super interesting. I just really like the fact that people can get invested into real estate into different areas, and you can see it from a different level. Like you guys can see it from a development perspective and really look at that and see how that's going to impact and unfold in the standard everyday consumer residential day-to-day trading markets. What are you like, you and Taylor and the rest of the team, like what are you guys most excited about the next few years? Where do you think, like just outside of the general, like there's an apartment building in North Vancouver, like where do you guys see the biggest growth opportunities in the marketplace based on your understanding and the conversations you've had over the next couple of years now?
Yeah, I think that it's something where when you focus on something and you're in it all day, it really is what excites you. We aren't massively diversified. We all are on real estate, and I think real estate is something that's in our blood. So, I think the prospect of potential exit sale pricing being more favorable in the near term, I think everyone has their fingers crossed that interest rates will start to see a decline. I think everyone's crystal ball has run out, but I do think that there is hopefully some good stabilization coming in the next several years. And, hopefully a lot of these things that the government are putting out there will incentivize developers, affordability will come into place, and there will be some more trading volume going on. I think a lot of these multifamily buildings haven't traded at the rate that they did in the past. But when a bit more consumer confidence comes into the market, people are buying and selling at a little bit more of a normalized rate. These projects that people may be a little bit hesitant on because they don't know who that end buyer will be, will come into place, and things will, again, everyone wants things to go so much in the right direction, but I think just seeing a little bit more stabilization and confidence into the market would be awesome. Shifting phone calls to a lot of, what ifs to just talking about the project and what the normal market is looking like over the next 2 years would be exciting. Cool. I think everyone looking forward to.
Love to hear that. Well, and I know you're a big proponent of, as a company, totally shifting gears. You guys are huge proponents of education, teaching, information. The way that we got connected originally, I think you guys reached out to me. You were looking to do some presentations to the public to share all the different types of investments. So I know that you guys don't sell everybody as, hey, you need to invest into private equities. And you know, anybody listening to this, it's a good reminder based on like what Austin said here, is that you need to focus on investing in what you're good at. But this is actually a good option for people to consider. As a note for me, again, just like I said, being uneducated about it years ago or in the past, historically speaking, you know, just like anybody else, you had that initial mindset of, okay, this is for people who have, you know, $500,000 or $1 million to invest into these projects. But you guys have made it accessible for normal families to do so. So if anybody wants to reach out to Austin and his team and find out more, you guys put on projects all the time. You got a YouTube channel talking about it. I'll make sure to link that up in the show notes of the bio and talk about what's going on. But before we go too much further, hopefully this will still be relevant when people are listening to this. Who are you calling to win the cup there, Austin?
Oh, wow. I think that the energy here in Vancouver has been incredible. I'd love to see Vancouver here bring home a cup. You know, you get a little bit nervous with them going too far and not. But I think it'd be awesome to see the Canucks to bring home a cup. Then again, I mentioned earlier on, I have a little bit of loyalty for the Leafs, so we'll see how it ends up.
All right, Toronto versus Vancouver Cup final. We're going to go with Vancouver. EA Sports is right. Every single person in Vancouver is praying and hoping, and in BC is praying and hoping that you're right, my friend. So we'll hope that you're on point, my friend. Austin, thanks so much for joining, brother. Really appreciate it. We'll make sure to link it up in the show notes. Any last parting words, my friend?
No, just thanks for having me on. And please feel free to reach out. We also host, which Alex has been a part of, real estate investment summits. So these are educational events where you can come and hear from not only what we're up to, but, you know, mortgage brokers, realtors, what they're seeing in the market. We really do feel that education is super important. And we want all of our clients to have all the information at hand. So if you're interested in any of these summits, we host them downtown Vancouver, also virtually. That would be a great way to get in touch and learn a little bit more.
Thank you, Austin. Appreciate you. Catch you guys next time.
Thanks, Alex.
That was an unreal episode of The Flow. I hope you enjoyed it as much as I did on my side right here. If you haven't already done so, make sure to check out all of the incredible resources that we have available. You can find us on Instagram at Flow Mortgage Co. You can find us on our website, getflowmortgage.ca. And of course, don't forget our free first-time homebuyer masterclass that's currently available on our website for anyone who listens to the episodes. And if you loved what you listened here today, the only thing that we ask for is to share this with someone else that you think this could help. And hey, maybe leave us a great review online.